Hello, everyone. Welcome back to the Switch Markets How to Trade community. I'm Shane Vernier, and it's Thursday, and it's time to trade. Today, we're going to talk about the news cycle. We're going to talk about some bullish breakouts that we have in the metals markets. We're also going to sort of see if we can get up and running with a few trade ideas for the Great Britain pound, Australian dollar, the CAD yen. We got a big level in the CAD yen that I think could come into play really any time. We've got an E-mini S&P 500 15-minute orb that is an absolute miserable mess. We need to look at that and give you maybe a few tips on how to stay out of trouble with this opening range breakout strategy. For me personally, I mean, that orb, that 15-minute orb on the E-mini S&P futures is an absolute mess. It's a train wreck. It's a train wreck. There's no other way to put it, but I do want to point out a few things because I think it could be important to help you avoid really getting caught up and chopped up with that orb strategy. And then gold, we got to talk gold. I mean, it's metals, it's gold. Andrea just pointed it out in the live chat in the How to Trade room. Gold and silver breaking out. You know, I've been really outspoken about silver at $40. We're going to talk silver. Gold at $35. I don't see any way around it now, but I have to tell you, the fundamentals are mixed. The fundamentals are mixed. By watching the metals market break, there's only a couple of things that I can really say that are the reason for the bullish move today, because our fundamentals are absolutely mixed. There's so much going on at the FOMC right now. There's so much going on with our economic data. I mean, we saw a huge GDP number today, an absolutely huge one, and it confuses me. I don't know where these numbers are coming from. And then there's some news that they're putting data on the blockchain. I don't even know what that's about. So we're going to try to unpack that a little bit. But there is a lot going on here today. We've got some hot markets. It's been a good run. I'm not going to really, I hate doing. I've listened to a ton of talk radio in my life, a ton of it. And, from all sides, right hand, left hand, news broadcasts, all of it. Now it's podcasts. Everybody's listening to podcasts. Me too. I've been listening to Rogan for like the last 10 or 12 years. Not every show, but when he's got some good guests. But what I cannot stand is these announcers and these guys, they all do the same thing. Ladies and gentlemen, when they get something right, they just dwell on it and dwell on it and dwell on it. We're not going to do that. We're not going to do that here. I like to focus on the losers just as much as the winners. However, that WTI crude oil trade that we had earlier this week, we were selling 65s. Ooh, that was a good one. That was a real good one. So it's been a good week. I'm confident that everybody's had a pretty good week. Action is a little slow in places. Next week's going to be a completely different animal. It's going to be a completely different animal, and we've got to be ready to go. When that calendar switches over to September, get ready. Get ready, because these markets mean business, and the big-time traders will be back at work. Summertime, typically vacation time for a lot of folks. All right, that's enough chit-chat. Yes, sir, good to see you. Welcome. Let me see. Sanhosh, hi, how are you? I hope you're doing well. Don't recognize the name, but appreciate you weighing in. Everybody ask all the questions you want. These are about engagements. It's supposed to be an interactive trading experience. If you have a question, ask it. If you have a comment, make it. Believe me, I got pretty thick skin. My feelings don't get hurt, and I'll help you if I can. If I know the answer to the question, I will help out. Gordon Williams, good to see you, Gordon. Welcome. Good morning, everybody. Good morning, good evening, good afternoon, wherever you may be. And then over in the How to Trade community, who do we got in the room? Andrea, good to see you. Andrea, good point out. Bobby Bob, good to see you, Bobby. Dave F19 and Lita, always a pleasure, guys. I sure appreciate you joining us pretty much each and every day. All right, let's get out to price action, because this is the big mover and shaker. In my view, you've got gold, and gold's rocking and rolling and really looking to break out of that pennant. And, it's sort of like we said, if it breaks out of this pennant above 3,500, we're not just going a little bit higher, we're going a lot higher. Now, there's a couple of reasons why that would be the case, but there's also a couple of reasons that I don't particularly understand. One of them is our GDP number today. I'm going to cover that as well. But right here, you can see really just a 90-day compression, almost 120-day compression pattern. Doji, inverted hammer, inverted hammer. Now we're breaking right up towards last month's high. Last month's high is up there at about 34, 38, 94. So sort of have your eye. I wouldn't say 34, 38 unless we're going to trade futures. I can give you a look at the futures markets if you're thinking of playing a breakout there. But on the spot gold, probably 34.50. Probably that zone, between 34.25 and 34.50. If we're going to have a fight there that's going to keep us in this compression pattern, it's probably going to develop right there. If we break above that 34.50, 35. I think we're going up and having a look at 35. This is sort of the move we've been waiting for. In all honesty, it's not much of a move, but it's pretty good stuff. So we're watching this pennant closely. Like I said, the game plan is going to be real easy above 35. If we get that big break, that September rally, then we're just going to look to buy in on retracements pretty much the whole month. We won't have a problem doing that. Rate cuts, all sorts of stuff at the Fed. Remember, traders right now are trading December gold. December gold contracts huge. That means the institutions are starting to hedge their bets, and they're starting to look to 2026 already. big time to be trading gold. September, October, right up until Thanksgiving in the United States. We've got a good 8 weeks, 9 weeks in there where we can really get the job done trading commodities, gold, and our indices. A lot of times traders make more money in the springtime when it's hot and in the fall when it's hot, and not so much in the summertime. So if you've struggled all summer long, don't panic. This has been tough. This has been really difficult. There's been some great trades in there, don't get me wrong, but we want this thing to move. We want gold to move. We want it to commit, and once it commits, it makes our job a heck of a lot easier. So right now, still a bullish bias, but we're awaiting the breakout, but we are moving, and we're moving big. Now, if you guys remember this play, we talked a lot about this 4-hour chart earlier in the week. You can see right there going back to the 22nd of August. You had the buy on the 4-hour. This is a 920 EMA crossover, our coded version. Remember, the gold bars are buy, the purple bars are sells, and you can see just very, very tight rotation right in here, tight trading, and then we had a sell signal right there on the 21st. That got wiped. There was your big break. What was that? Jay Powell coming out and talking about rate cuts. And then since then, I mean, we were off to the races. We really liked that one. This bar right here, you'll notice this 4-hour bar, this crazy candle, that was when Trump fired Lisa Cook on Monday night. So what you had right there, Monday night in the States, probably Tuesday morning where a lot of you are. But right there, that compression, that volume spiked because it was an outlier. Nobody was waiting for it. We got more on the Lisa Cook saga today, the FOMC member that was fired by the president. Unprecedented stuff. I've never seen anybody go after bankers ever. That's like a no-fly zone. You don't typically go prosecute bankers. Not at the federal level, you don't. Now, local level, yeah, people get popped for embezzlement and things all the time, but at the federal level, that's a first. So we got the big breakout, bullish break. I think we're going right up to 3,500. That was sort of what I was saying earlier today. I'm in the live chat there on how to trade, but that level is my key level. Keep a close eye on it. All-time highs for gold. Do we churn higher? Do we pull back? We might get a little bit of compression up around 3,500 to the bear, but once we break, and I think we break hard. I really do. Silver is another one that was rocking and rolling today. You can see I've got all my old sort of analytics there, but we know one thing. We know that 40 is a big deal. Big round number, huge round number. You got a monthly here. We never did get the pullback we wanted down to 35 and a quarter-ish. Thought we would get it for a little while. We didn't get it, and that's okay. That would have been what I call a gift trade. If we would have got that number, it would have been easy peasy. It was very simple to make money in this market. If we got the pullback, we didn't get it, but right there, we're churning. Now, the fight's going to be on at 40. This is a little bit different. It's a little bit different than 3,500. 3,500 in gold, we've sort of already traded up in that zone. Now, we fell just shy last month, right there, 39.50. Okay, but we didn't put in a hard test of 40. This could be a little bit stubborn. This could be a little bit stubborn for silver, and the reason why is you're going to see sellers right in front of 40. Now, we saw them once before at 39.52, but maybe 39.75, 39.90. Okay, they're going to be there, but where do those sellers really step in at? I don't know. I really don't know. Right there, 40, I would say, we might be able to get a scalp going with 39.94, 39.95, and just look to play that for just a tight counter trend scalp. But make no mistake, silver's going up. Silver's going up. Gold's going up. There's no two ways about it. Now, silver is one of those things where, you're not making all-time highs. And that's the other point I want to make with silver. You're not making all-time highs. Gold's pushing 3,500, okay? That's all-time high. We know that. We know we got a great chance of making another all-time, but we've traded this high in silver before. This back in here, back in the 2008 to 2012 financial crisis, global financial crisis. You didn't want to be there. If you were there, you didn't want to be there. You didn't want to be there. I was there. It was not fun. I'm very glad that part of my life's over. Even though you'd love to go back and get the youth back a little bit, I don't want to relive that for any amount of money. No, thank you. Learned some hard lessons back there. A lot of us did. But you keep fighting and you come back. And in all these months that went by, you try to come back as a better version, not only of yourself, but as a speculator, as a trader. Now, I wasn't trading back then. I just had begun. I had to. I didn't have a choice. But right here, silver was crazy. Why was silver crazy? Because there was a full-blown financial crisis. Now, your top right up here, your all-time high in silver is one of those things that's 49. Okay, so right around 50. That shouldn't surprise anybody. We are well-versed in key levels. Now we're going way back. Let's get in our way back machine with silver. Take a look at that spike high. February of 1980. It was a crisis. We were coming out of the 70s. We were coming out of 70s stagflation. We hadn't quite got into the boom period of the 80s, which came after basically credit cards were introduced and given to the public en masse. A lot of that happened under Reagan, a lot of that fiscal policy. But 1980, what did you have happening here in the United States? You had an absolute crisis. You had stagflation coming out of the 70s, the 70s coming off the gold standard in 72, 73. And then you had the oil wars, the oil embargoes and all that jazz in the mid-70s and late 70s. It all led to just a terrible environment there in the United States. We had interest rates at 20%. I mean, people complain about interest rates now. Go back then, 20%. I mean, I remember talking to my uncles, my parents, all of them. They said, hey, listen, we would go to work for a month and about 3/4 of our income was going to pay the interest on our housing loan, on our mortgage. It goes, all of our money was going to pay interest, and it just was the worst time ever. Then they introduced credit cards, and they did some different things after the savings and loan scandals. You don't have to worry about that. But right there, what's the high? 39. What's the high? Right there. What do you got? 48? What's the high right there? 48. So 49, 50, and 48, that's your high. So when you're trading silver, it's different than gold. The gold's already trading near all-time highs. That double top right up there, you bet we're watching it. Would I love to short from just beneath 50? You bet. That's a trade that comes around maybe once, twice in the last, 40 years, 50 years. So we've got to be ready for it. So if we get a shot up there, we're definitely going to be counter trend trading this, but we're not there yet. I think 40, you're going to see some compression right at 40, and then we're going to make the next leg up. What should be one thing, if you're a historian and you believe in economic cycles and all the different things that we talk about, those are two crisis periods. Those are crises. And we're starting to see silver here get into crisis levels. Does somebody know something that we all don't know? That's what I always wonder when I see valuations like that. Absolutely. Tina, good to see you. Tina, welcome. Laugh out loud. Yeah. Good to see you, though. Welcome. We had some good trades yesterday that went pretty well for some folks. I believe there was a few tickets cashed. That was good. For me, the biggest trade this week was gold. Guys, this silver market, I mean, maybe we should do a video on the silver market right now because you're getting into rarefied air. I've listened to a lot of folks, a lot of analysts believe that we're going to 80, somewhere up in there. I don't know if that's the case, maybe in the next decade. But right now, 39, we're approaching crisis levels. Somebody knows something about our economy that I don't know and that you don't know, and they're hedging their bets with silver. One last thing I'm going to say about the gold-silver ratio. Remember, the gold-silver ratio is the ratio of the prices from gold to silver. So right now you're trading, gold's trading right around 3,400, and then you've got silver right down there at about $39. So we're underneath 100 now. Remember, that gold-silver ratio was right around 100 for a long time. That means what gold was trading at 100 times what silver was. We're planning that to come down. And in order for that ratio to come down, we don't really see gold selling off to make up the difference. We see silver starting to break out and rally at a much greater rate than gold. That's what a lot of folks are saying. They're smarter than me. A lot of them are. But I'll tell you what, this is an interesting market, and 40 is going to be the first catalyst for action. We will see a lot of action at 40. And if we break through 40 clean, then we're going to go very high, sort of like the gold, except you don't have that big pennant. You don't have that pennant. So interesting stuff right here. If I'm trading silver, I mean, for me, it's relatively simple. I would just be buying pullbacks the whole way. You can see on the daily chart, we had a real beautiful pullback right there. Spike low to a spike high, something like this. I mean, that's pretty good stuff. Pull back right to 38% and then bang higher. If you wanted to trade right now today, 30-minute chart, I would definitely want to make my mistakes to the long side. Something like that, though, you really tight, sort of mid-session, really, really tight there during the U.S. session break, and now we're starting to get a little action. I would stay out of that on an intraday basis. Let's go to a 4-hour chart and potentially find an entry for you. 4 hours, no thank you. Breaking out. Remember, thank you for everybody that joined us on that Bollinger Bands tutorial yesterday that we did, our live webinar. This right here, we've broken out, and now we're starting to move a little bit higher. We're broken above that upper Bollinger Band. That tells me that, yes, we are in breakout territory. We're just watching to see what happens here closely. This right here, I wouldn't be looking at Fibonacci's at all. Why? Because you got sort of a spike high right there, and then you traded beneath that candle. So your spike high there and your spike low, and we're just sort of going sideways. I'm not interested. I want to see the market go up there and test out 40. Maybe we'll take a short from underneath 40. But for right at the moment, I'm not really interested in trying to buy pullbacks here with that kind of market structure. It could get pretty sloppy. Now, if we wanted to use something like the 920 on a 4-hour, let's take a look at what it has to tell us on silver. Okay, right there was your silver buy. So it's, it's even more so. It's just even a better play. Right there was 38.10, and you're up to 39. Pretty darn good trade right there. If you were looking at the 4-hour chart, let's go to a daily here on this 920 EMA crossover. Look at that. You don't get the cross. It's fighting. It's really fighting. There's your buy. Look at this chop here. That was a buy that lost. That was a sell. Then you get a buy. Then you get a sell. Then you get a buy. That's really tough to trade. But if you hung with it, there was your runner. You're buying from 33 and really just hammering a long-term trend. That's pretty good stuff. Pretty good stuff. Right this minute, though, the moving averages are close, which tells us the market has flattened out a bit, and now we're starting to make another leg higher. It could be pretty gold. Let me see. Tina Xing, I am holding gold since last Friday. Well done. Well done. I know there's a few of you in here that are holding gold. Me personally, there's your daily. So something like that would have been a real tight daily, a nice score, even on a daily chart. But if you were looking at that 4-hour chart, there it is. That was when Jay Powell decided to make the statements last week at Jackson Hole, which is about 2.5 hours that way. And, yeah, boom. Interesting. We're going to 3,500. We just got to wait and see how it pans out. All right, everybody. So welcome to the Switch Markets community. I definitely wanted to get right out to that gold and silver situation. Nice point out. Nice spot, Andrea. I was watching that, and I was thinking the same thing. I said, yeah, the metals are breaking out, and that's a great place really to begin today. I wanted to go over that before, a lot of times folks have to get in and out of these streams. But those are big-time markets and big-time levels coming into play. All right, the whole point of the Switch Markets community is to take some of the education from the How to Trade, the How to Trade community, and sort of meld it with the traders in the functionality of Switch. There's going to be a lot of content hitting the Switch Markets YouTube channel, so if you haven't already subscribed or if you haven't checked it out, you might want to check it out. It's a brand new channel. There's only just a few hundred subscribers. Feel free to go over there and check out what we have up right now. There's not much there, but the How to Trade Com YouTube channel is fairly, full of videos and educational content that you can use. So is the Forex Signals TV channel. The Switch Markets channel, that's going to be growing relatively quickly now. And we're going to be starting with just some fundamental base videos and content. We're going to be looking at maybe how to use a currency heat map. I actually got that question the other day. We're going to talk about how to upload some of those EAs into your MT5 platform. Or maybe you haven't made the transition from MT4 to MT5 yet. We're going to talk a little bit about how you can do that successfully. And then also Algo Builder, the AI platform. There's going to be really some content coming out that we've been building on Algo Builder that's going to be pretty good. So all that stuff's going to be at your disposal. Absolutely free. You just go on over to Switch Markets. Look for that. It's probably not going to happen right now today, but we are releasing shorts out there on the regular. We always have shorts of 2, 3, 4 a week hitting that Switch Markets channel. The full videos, those are going to start coming out with regularity here, probably beginning next week. So once we get into the groove there, we just have had a few challenges on the back end. Once we get into the groove, you're going to have a lot of content there, and it's going to be coming out relatively regularly. Pretty much every day, it looks like. So I'm looking forward to it. The live streams, of course, ask me anything you like. I love the live streams. I think they're probably one of our best tools just to interact with the trader that's in the pit, that's ready, that's trading. That's what it's all about. All right, guys, let's go ahead and do a trade update right here. Support in view for the Great Britain pound, Australian dollar. Let's go ahead and take a look at the weekly chart. I wanted to hit this right away because this one's interesting. This is a trade idea that I put out yesterday. And essentially, our key level is down here right around 206.46. So I was looking at about 206.55, I believe, somewhere in there. Check out our trade ideas over at How to Trade. You just click on me, follow me. They get beamed out to your inbox each and every day. And I do believe they're on the cover of the website as well. In any case, the low right there, the low of this week and the low pretty much during the overnight was 206.70. We're very close there. We're about 206.96. If we get a chance to bid this zone, the back end of the golden zone, right around 206.50-ish, 55-ish, that's a pretty strong, support zone. So I'm watching to get that pop. I want that big pop right off of that level, and I think we have a chance to get it late in the week. I'm watching the Great Britain pound Aussie closely, and that's funny because usually I just watch the majors. I really like the majors because you don't have to deal with maybe a spread like this. 4.4, 4.7. I mean, that's a lot of pips. So we have to account for that in our trade, and that's why the trade idea was designed for about, 80 pips, I believe, 60 or 80 pips. A lot going on here in this market. I think we have a chance maybe to score there from right around 206.50-ish. Watching that one closely. Definitely watching that one closely. Now, one other one that I want to cover right here, and this is on your MT5, your Switch Markets MT5 platform. What we want to do here with this Euro USD is really understand a couple of things about trend lines. All right, a couple of things about trend lines. Number one, this is a bullish trend line. Okay, we started right here at this spike low. We had a second touch there. You could say that that's the third touch, but it really isn't. This is all just one touch. So you've got one bang. There's your swing low. There's sort of your second touch. A little bit of action here. That would be your third touch. Shane, why isn't this a second touch? Because it didn't retrace and then come back down and approach it. I would consider all of that area right in there to be one test of that line. Maybe I'm wrong. A lot of folks would argue with that. I don't. I like to see a pullback. Boom. So what do we have here? There's your swing low. There's your pullback. There's your second test. Pullback, third test. Trendline trading is all about the third touch. All about the third touch. What happens on the third touch here? This trend line acts as downside support. You get a beautiful kick. Then we come back down, and what do you got on that fourth time down? You break it. So you break it, so that would have been your initial short. You would have had a beautiful trade right there, and then things get really ugly when Jay Powell says we're cutting interest rates. Went right back up to that trend line. Now that trend line's resistance. That's a resistance zone. So now you go in, you get the big short on Monday, and since then we've sort of been compressed. This right here is sort of a bullish hammer. That formation with the really long wick and then the hammer, and then you get the big break to the top side. That is sort of a reversal type of a signal. I watch for hammers a lot, especially on real short time frames, 1 minute, 5 minute charts. When you see a hammer, it could be the end of the prevailing price action. Now here's going to be the big challenge that I always say, listen, our initial stop loss was right above here on this trade, and it wasn't a formal. I believe was it a formal trade idea? I don't think I put this one out because of the news events, but this one right here, you probably would have got stopped when Jay Powell was talking at Jackson Hole. That would have been really tough. But you'll notice that the close was right on the trend line. So let's say you were making this trade as like a swing trade or a daily trade. You were almost waiting for this to close above the trend line before bailing on the trade. And you come right back down. Now, here's the problem. If you know where you need to get out, and I would say that right here, probably right above Jay Powell, is where you need to be exiting, or you could even exit right above our initial swing high, what we talked about. You could do that as well. It's just a matter of a few pips. But look what's going to happen. If we don't exit until we get a close above the trend line, we could be in big, big trouble here, especially if the market reverses and goes against the USD. So I would be careful if you're holding trend line shorts here. I would be cutting these off above the Jackson Hole high. We need to see some bearish action. You need to see some definitively bearish action, and we haven't seen it. Today we didn't get it, and it's a surprise because the GDP numbers came in the way they did. That should have suggested maybe higher for longer was the way forward. That didn't happen. And when things don't happen the way that they should happen, according to the fundamentals, we got to wonder what the heck's going on. It's like that silver market. That silver market is getting into those areas where there was a financial crisis. That's raising eyebrows across the board. You'll see that if you watch the financial news. You will see some talking head will come on, or an economist, and they'll have their little polka dotted bow tie, and they'll sit there and they'll talk to you about this correlation between silver and crises. And you'll remember this live stream and say, yeah, Shane already said that. We all know where silver's at. I'm very, very curious of how the heck the Euro USD can rally on the back of a real strong GDP report. We're going to talk about that right now. Interesting times, guys. Absolutely interesting times. So that was our trade update. I think we've got a pretty good chance on that pound Aussie. Let me see. Gordon Williams oversold. Tina, listen to me on the gold trade. Well, that's fantastic. Nothing wrong with taking profits. If you made a stack of money, I like taking profits. It's fun. You get to go out to dinner, maybe go buy some new clothes or something, have some fun. In any case, oversold. Let me see. John, how do we understand between the 200 EMA and the 50 EMA? Yes, please talk about the difference between MT4 and MT5. Well, that's a great question right there, and I'll get back to that one in a second. We'll go over some of these fundamentals first. But MT4 and MT5, we sort of made the transition here at Switch Markets to really dive into MT5 and the advanced functionality. Now, there are some features that are new in comparison to MT4. MT4 really has been around forever, and MT5 is a more of an upgraded version. It's a little bit seamless, but there's a few things on MT5 that have us using TradingView a lot. And one of them is you can't adjust the fonts. I tried to adjust them, and there's no script in there for it. So, but the EA functionality on MT5, there's a lot of newer EAs built just for MT5, so that would be one difference. Another difference is I believe the presentation's a little bit different with regards to how the canvas looks on the charts. So like if you were looking here, this is a little bit more streamlined than MT4 is. I always sort of got a kick out of these. I don't really know. I mean, you're supposed to be able to center your charts doing that, but it's really difficult. You can do a few things. You can sort of move your charts a little bit. That's a little bit better than MT4. But the big thing with MT5 is probably your order entry and the way that you trade. We'll talk about it. We'll make a video on it and get back to you on that. But good question. Now, John, how do we understand between the 200 EMA and the 50 EMA? Yeah, I mean, it's real simple. They're both exponential moving averages. The 200 is a longer period than the 50, so that's going to give you probably it's going to give you a smoother value with respect to the historical data. So you're just taking more data points into account. It's a broader look at the market, a 200 EMA as opposed to a 50. So yeah, there's nothing wrong with that. It's just the different way of looking at it, longer terms, longer durations. But I do like the EMA. I favor that greatly over the rest of the moving averages. Okay, today GDP and jobless claims were the order of the day. These are the big fundamental market drivers. Continuing jobless claims, don't worry about that. Don't even think about continuing jobless claims. It doesn't matter. Those are just the folks that are still on the unemployment rolls that haven't dropped off yet. I find that as a wildly unreliable statistic, and that's for the news media. Let them focus on continuing. What we do need to be thinking about, core PCE report, the PCE price index comes out tomorrow. This core PCE prices, it's like they put it out with GDP to fool you. That has no correlation with what's coming out tomorrow with the PCE price index, so throw that away too. Corporate profits, don't care at all. I mean, it means nothing to the markets essentially. They look at earnings reports, which is a company by company look, so don't worry about that. GDP, that's what we're after today. That's your big market mover. And it hasn't really moved the markets, but it's definitely something that has everybody talking right now. GDP quarter over quarter for Q2 came at 3.3%. Over the 3.0 expected, what we already had out, that preliminary figure, and up from a Q1 negative 0.5. So what we have here is a GDP that's been revised up. It's been revised up from the previous. Unbelievable. I was on record last spring as saying you're going to have an according to Hoyle recession. I thought GDP for Q2 was going to come in negative. It did not. It didn't just not come in negative. It shattered expectations to the top side. That's a huge print. Suggests that potentially you would have a hawkish rate environment because the economy is growing so well. Why are your employment numbers down so low and GDP's up so high? I don't know. It's a good question. It's a good question. In any case, the GDP price index, this is one that we were also focused on. This is an inflation. They call it the GDP deflator. Well, this is really a good look at purchasing power and inflation and what exactly the prices are for a lot of those GDP goods and services that are used in the calculation. You showed 2% growth. That was down from 3.8% growth. That's big. We thought 2%, still 2%. That's a major improvement quarter over quarter. The numbers in Q1 were not good. The numbers at Q2, they're not looking too bad. GDP sales 6.8% above expectations and way up from negative 3.1. That is absolutely huge. That's absolutely huge. I mean, that's a major turnaround with GDP sales. Initial jobless claims, that was the other facet of this weekly jobless numbers. You need to really focus on this one. If you're going to do anything with jobless numbers on a weekly basis, you look at initial. Those are the folks that have just signed up for the unemployment rolls. They just lost their jobs, and they're trying to get assistance. Nothing wrong with that. I mean, everybody goes through it eventually, or most people go through it eventually. A lot of people go through it eventually, and you're on initial. So you're now on the unemployment rolls. That gives you a baseline gauge of how many more people are joining the rolls than we're on it. So initial or continuing, don't worry about continuing. Initial, yes. If you see a big rush of folks that are applying for unemployment benefits or unemployment insurance, that would be the issue that we would all say, oh boy, what's wrong with the jobs market? This number came in decent, 229. It was beneath expectations, but also beneath the previous release. You're talking about nationwide figures and just a discrepancy of about 5,000 week over week. I mean, I really wouldn't worry about it. I would call that a throwaway number. That doesn't tell us anything. Unemployment's just sort of hanging where it's been hanging. That's not a market driver. Jobless claims 4-week average. I don't even look at that. There's so many ways to skew averages, especially when you go back and revise things, and it doesn't mean anything. PC prices Q2 PC price indexes tomorrow. Don't focus on those. Real consumer spending, that's interesting though. It was in the GDP report, 1.6%. We were expecting 1.4%, way up from 0.5%. So the money's being spent, and this money being spent from the consumer is sort of driving the GDP figures. So let's have a look at sort of the horses from the mouth. Bureau of Economic Analysis. Remember, there was a lot of folks got fired over there. Interesting to see how the numbers are now. The U.S. economy grew at an annual rate of 3.3% in Q2 225, a sharp rebound from the 0.5 contraction in Q1, according to second estimates. The figure was revised slightly higher from the first estimate of 3, mainly due to upward revisions to investment and consumer spending that were partly offset by a downward revision to government spending. So what does it all mean? Investment, foreign direct investment, FDI, that's what the Trump administration's been trying to get going, money flowing into the country. There you have it. It's driving GDP. We'll see what happens. All this should lead to a stronger U.S. dollar, but really there was your big turnaround. Terrible first quarter, absolutely brutal first quarter. We could talk about why that was the way it was. It doesn't matter now. 3.3, you're right back in to where we were, and Q3 numbers are going to be very interesting. Very interesting. So what did it do to the markets? What did it do to the stock markets? Well, not much. I mean, right now we're sort of modestly higher. The NASDAQ is the big winner right now, up about 132 points. S&P 500 is flat. Dow Jones Industrial is flat. Here's the orb. I promised to go over the orb. Opening range breakout strategy. This is a good look at the 15-minute orb. It looks like I'm a little bit late on sort of giving you the caution of maybe not taking this orb, but I want to break down sort of the schematics here of why this type of trading strategy can be tough. 15-minute, all right. There's your opening bell, ding, ding. All right, there's your first 15. There's your second 15. What do you have? Let's get a volume up there. I like to see my volumes on the orbs. Very important to me personally. I want to see where exactly, especially with futures contracts, you always want to look at volume during if you're trading futures. Volume. All right, right there. Okay, so you can see why we want to do the opening range breakout on an S&P 500 after the U.S. Open. The huge uptick in volume, that's absolutely key. Absolutely key. So you're always going to want that on your charts if you're trading probably a futures contract or maybe an equities index CFD, something like that. So in any case, big time volumes. There was your initial spike up and then sort of a doji, and then we got the big sell-off. That was your first 30 minutes of trade, and we traded inside of that for hours. For about 2 hours? Something like hour 45? So something like that. That essentially would have been your buy out of your orb. So you're looking for your first bar close outside, either above or below the orb. Where's your stop loss going to be? It's got to be down here, right? If you tried to play it tight and put it right beneath the bar, what happened? You might have got stopped. So if you're going to play this sort of a conventional orb trade, you bought in up there right around, let's say, 65.09 S&P 500, and your stop loss is down there at 64.80, so that's 20 points. 20 something like that, 29 points. So if it's 29 points at 4 ticks a point, what is that? Let's see, 80 and then 36. So 80 plus 36 is what, 116, something like that. So you've got 116, all right, 116 ticks at $12.50 a tick. That's your initial on one contract. That's your bet. Now you can go down to micro contracts and make that cheaper. I find that to be a really big range. Like a really big range. So if I was looking at this 15-minute orb and saying, what do you think? I'd say probably not. It's too big of a range, too big of a risk. Now what you could have done is we could have improved our orb entries on something like this and built our Fibonacci's according to the top of our breakout bar, potentially, and the bottom of our orb range, and that would have given us an entry maybe at 38% at 65. That's a pretty good one. That's better. That's a lot better than 65.09. So I could see that working potentially for us. But as of right now, I think that you have to figure out a way to make that trade affordable or you don't take it. That's a big range. So how much money would we need to get to make this worth it? Even on a 1-to-1, you're talking about 29 points. It's got your first profit target has to be up here right around like 38. Something like that. It's nothing up there. So basically you're saying we're going to break out and get into rarefied air and potentially have to really knock some people out of the box right up around 65.25. I think it's a really high risk trade. If I was personally going to trade this type of orb, it's important that you're always using your head when you're trading these strategies. But if I was going to trade this type of orb, we would go back to that video, the last video we put out on how to trade, how to improve your orb entries. And it would be something like this. I would be looking maybe at like a deep pullback, 62% potentially. Maybe even the 50% rule of the actual orb. That wouldn't be bad either. Maybe 50% right there, right around 64.95, something like that. Pretty much anything but buying the top of this market. So I'm not buying it, guys. I'm not buying it. Not buying it at all. I think that orb trade right there is just it's a death trap. It really is. So if you took it, that's fine. If you didn't take it, that's probably better. But I wouldn't worry about it. If you're already long, stick to your guns, stick to your rules. Just manage your risk accordingly, and maybe you get that big run. But right now it looks to me like you could be in that orb trade for days. That's what it looks like, definitely. Let me see. As far as, a couple of the other trades that we're potentially looking at, well, I mean, the yen pairs are interesting right now because the yen is so dead. So we went back to this CAD yen. We talked about one at 106. I believe I talked about that a little bit earlier or yesterday or the day before. That 106 zone is absolutely huge for me personally in this CAD yen. So if you're on a monthly chart, 106 even, that was a trade that we hit. I believe we hit it last week. So you go down to the weekly, you can see we just put in a beautiful test of that zone and then a bounce. I still like it. I still like that 106 zone, maybe 106.09s. That's potentially just rock solid downside support. But when you get out of it, when you get out of maybe some of those other pairs and you put the dollar up against the yen, what's happening? I mean, it really is just miserable, guys. I don't know what else to say about it. It's really brutal. Right now, if you're a yen trader, you're not getting the moves. You're just not getting the moves. So this weekly range is extremely tight. I mean, look at this yen weekly range. A high of 148.18 to a low of 146.66. I mean, well, that's 34, about 150 points, something like that, roughly, give or take. That's absolutely unbelievably tight. Unbelievably tight for a yen weekly range. So if I'm looking at something like this, I'm saying, okay, we're trading right at our 13-week moving average. We've got a 13-week Bollinger in there, Bollinger midpoint. I'm not even remotely interested in this. Not even close. Now, if you guys remember from yesterday's webinar, a Bollinger Band webinar, what do you have happening here on the weekly? You've got some parallel Bollingers setting up. What does that scream to us? Rotation. So if we get a chance, we'll probably be looking to sell up here and buy down here. We just have to get a move. And for right now, I just don't see it. I just don't see it at all. You've got monthly. Here's your monthly chart. A little, similar to what we were just looking at in that CAD yen, but something like this. Spike low to maybe that double top. 146.71, 75 maybe, something like that. Pullback zone to 144.10. I mean, I would love that. So if we were going to potentially build a trade idea, what could we say? 144.10, maybe somewhere right in there. Let's go ahead and mark that. Let's back off to our weekly. So there would be your weekly chart right in there. Potentially, you'd love to see it line up with that lower Bollinger Band on the weekly, but I don't believe we're going to get that. So we've got to have a move out of the yen, guys. Really difficult trading. If we wanted to go to, say, a 4-hour chart, let's see what the Japanese yen's doing on that 4-hour. Coming down a little bit. So something like this. Dollar yen. There was your entry. Turned out pretty good right away. You had a chance maybe there to make some money, but there's your sort of your swing low there. You had a buy signal there that was pretty good. You had a sell signal there. I guess that sell could still be in. You guys see what I'm getting at. This is really choppy and ugly. Very difficult to get a beat on it with the 920. Very difficult. Let's go to our daily. Get rid of all this stuff here. There's your daily sell. Hammer, purple signal, cross under, boom. So if you got that, you're already in the money. What would this trade look like, though? I mean, how could you really execute with any confidence? It's hard when the market doesn't move. So you have to be looking at something like this. Stop loss, probably right above that hammer. Profit target, 1-to-1 would be somewhere down in here. If you wanted to shoot maybe for the market structure trade, maybe down in here, nice swing trade down to 143-ish, 143.57. I mean, it's all possible. You can do it. I mean, there's room to the downside, there's room to the upside, but when markets fall into patterns like this, where those two moving averages get real close together, I mean, it really is difficult to trade, especially on a crossover. Those are the types of environments you probably need to avoid. However, you do have an active sell signal, and this thing's got a chance maybe to move, but what's going to move it? What's going to move it? Potentially interest rate expectations. Something like this. Next FOMC meeting. Did anything happen today with GDP? No. These expectations are exactly the same for the Fed. The September meeting, 85% say we're going to get a rate cut. Let's go ahead and take a look at our December expectations. That's what's really starting to dictate policy in these markets. Is it just one rate cut coming, or is it 2, 3, 4? We don't know. We know one. We really take something to not cut interest rates in September, but something like this, 47, 37, that tells us that what? You got about a 70, 84% chance that you're going to come in off at least a half point. Crazy stuff. Let me see. Yes, sir. 920 with RSI confirmation is so much better. Keeps you out of those whipsaw signals. Yeah, yes, sir. I mean, it's a great point. Let's say you're going to look at this and you pull up that RSI confirmation. What is the first thing you would be looking at if you were doing RSI as your confirming device? That right there. What is it? It's right at 50. Good luck, man. I mean, when that RSI, we could talk a lot about, what RSI is and how it works and how it's functional, how it isn't functional, whatever. Bottom line is this: when price is right around that 50 threshold, especially on a daily chart, there's nothing happening. It's just flatline. So yes, it could be a great way to keep you out of those choppy markets, and that's kind of why we highlight it, really. But good stuff there. I mean, 50%. It's absolutely crazy. Let me see. What time frame? Let me see. Blue Mango. What time frames are best for the 920? All right. On the forex charts, I don't really have any super steadfast rules. Love the daily. Love the 4 hour. Something like that. So the 4 hour chart on a forex really gives you a chance to trade what are 24-hour products. Currencies are traded all around the clock, as is pretty much all of our markets, but currencies are different because each time or each part of the world sort of has its different opinion on different currencies, and that's where the volume comes from. So if you're trading something like the dollar yen on a 4 hour chart, it gives you 6 price bars per 24-hour period, I believe, 6 price bars per day. So you're going to have volume kick up around the London Open, around the US Open, and something like the dollar yen, you're probably going to get some right around the Tokyo Open as well. So if it spans that big of a gamut, as opposed to our U.S. equities indices, which really only trade hot during the U.S. session. They do trade all around the clock, but if you're really an intraday trader and you're looking for an action, you're probably going to be looking towards that Wall Street session to get the job done. That's more of a 30-minute chart for me. Forex, 4 hours are pretty good. I love dailies as well. Dailies are pretty good for the Forex. So if you're trading Forex pairs, as far as gold goes, 4 hour. 4 hour, and if you want to trade the London U.S. overlap, 30-minute. You can do a 30-minute chart potentially on gold. You just got to focus on when you're going to do it. You want that. You could probably even start with the London session, London Open, and trade gold all through the U.S., maybe mid-session. But believe me, after about noon Eastern, gold typically dries way up. Now, that's not true. Maybe 12:30 Eastern. You got to be very careful with that, though, because once the markets dry up and they're not there, there's no action, you got to get out of the 920 because it'll eat you alive. Labor Day, Monday, don't trade the 920 on Monday. I made a video 3 times to not trade crossover strategies. Check it out. One of them's holiday sessions. Don't do it. You'll get chopped. Let me see. Never something like the 5-minute. Oh, you could always trade it on the 5-minute blue. I mean, like right here, if we wanted to go over here and say, okay, here's gold futures. We're on the move today. Here's our 920. Let's take it down to a 5-minute chart and have a look. Okay, there it is. Nice, beautiful 5. Now, typically, this is where we add confirmation. So our RSI confirmation, when we're above 70, we're looking to sell it, and that would be a 9 crossing under the 20. And when we're below 30, that's when we want to buy it, and that would be the 9 crossing over the 20. So right here, technically, we're on a sell here on the 5-minute chart, which doesn't surprise me. This is really a nice big run. The problem is you've got to get that 9 to cross under the 20 to qualify the trade, and then we can take the shot. So, yeah, you can trade it. I just recommend 1 minute, 5-minute, those real short time frames. You probably need to go with confirmation as well because the confirmation, whether it's RSI, stochastics, VWAP, MACD, whatever, you need to make sure that you have something in place to keep you out of those choppy markets because on a 5-minute, you're going to go through stretches where just nothing happens. And when nothing's happening, that's a great time to lose a fortune trading crossovers. All right, guys, we got a couple of news events here that I want to talk about, little opinion pieces, and then we'll go ahead and sign off today. This is it. This is the retaliation from Fed Governor Lisa Cook. Remember, was up on mortgage. Charges haven't been filed yet, but it looks like they may be. This is a DOJ criminal referral. What's a criminal referral? It means that they're going to investigate. It means they want to see the papers. We want to see your papers. We want to see everything. We may even put you in front of a grand jury where you're going to have to testify. Now, the problem with mortgage fraud is that it can easily be played off as I just made a mistake. Now, we know that they have the documents. We know that Schulte, which is the head of the Federal Housing Administration, the FHA, man, a lot of acronyms. The FHA, what that is it's the body that watches all the mortgages and things. Well, these are high-profile mortgages when they go to Fed members. This person, Lisa Cook, supposedly signed on that 2 mortgages were her main residence, one up in Michigan, one down in Atlanta, only weeks apart. So it screams to, okay, you're committing fraud. Why? There's tax advantages to doing that. There's insurance. There's lower mortgage rates that you can get. There's all sorts of different things that potentially played into that decision. Now, the defense for Lisa Cook will be, I made a mistake. It was an oversight. I didn't realize I was doing it. So the other side of it's going to be, well, if you're on the Fed, you're on the FOMC, and if you're too stupid to, not be able to sign your name to agreements that are legal twice in 2 weeks, then you probably shouldn't be on the FOMC. And that's the truth. Now, I don't know what happened, but I do know that for them to bring those type of allegations in a criminal referral, you're probably going to have at least some evidence and some suspicion. Well, here's Cook's robust. Fed Governor Lisa Cook sues Trump to block her firing. Trump fired her Monday night. Federal Reserve Board Governor Lisa Cook sued to challenge her removal. That's great. I mean, you have that luxury at that level. Many of us could try to sue when we're fired from jobs. It may or may not work. Typically, it won't work because it takes resources to do that. Trump said Monday that he was firing Cook because of allegations that she committed a mortgage fraud. That was part of it. The other said it was incompetence on her part, which will be the premise that goes in front of the Supreme Court to really verify this firing. The real question is Cook going to vote in September? That's the question. I don't see how. I do not see how. But critics say that the move undermines the independence of the Fed, which sets key interest rates. I don't know. If you committed mortgage fraud and you're on the Fed, you should get investigated and charged potentially. Remember all that one law? Nobody's above the law. Well, these are financial folks. You can't be committing mortgage fraud if you're on the FOMC, can you? The case was assigned to Judge Giacab, who was appointed to the federal bench by former President Joe Biden. They included that right there because this is a political storm, and they think that potentially that judge will give them a favorable ruling. So there it is. You're getting sued. That is going to be an ongoing saga, but I do believe it's going to be rectified relatively quickly. I believe it's going to be relatively quickly. Now, here's the other thing that I have no idea what this means. Trump's newest way to promote crypto. GDP data goes live on the blockchain. I have no idea what this means. Okay, data goes on the blockchain. It's interesting because U.S. government publishes GDP data on public blockchains like Bitcoin and Ethereum, endorsing crypto technology. Okay, that's fine. But here's what's interesting about all this. Commerce plans to expand blockchain use across government departments, reflecting Lutnick, who's the Secretary of Money somewhere, works in the Trump administration. Expands blockchain to use government departments, reflecting the vision. Commerce plans to expand blockchain use across government departments, decentralized data distribution. That means the days of the Bureau of Labor Statistics, all these bureaus that the government has, buildings full of people that are supposedly counting jobs and measuring economic data, those are gone. Those are going to be gone. If they put it on the blockchain, it's all going to become automated, and that's the way that they're going to end up doing this. It's going to change everything. It's going to change all the numbers that we go off of. They're all going to be different. They're going to be, people aren't going to trust them at first. And then as we move forward in time, the markets will adjust. This is another potential big time market mover and one that we need to be definitely aware of as we roll deeper into the end of this year, into Q3 and Q4. This is fascinating stuff. They're going to change the way things are measured, not necessarily the measurements themselves, but how they're interpreted and reported. Changes everything. So I'm always interested in things that are potential game changers. Here's a look at the Bitcoin chart. That's not the chart that I wanted. I wanted to go to this Bitcoin chart because we have a decent pullback in view. We talked a lot about maybe catching a nice deep pullback last week. We didn't catch it last week. We got a shot now. 105,474 is going to be our long-term macro 38% level. We'd love to buy probably from 107.50, somewhere up in there. I think that, or 107.5, that would be absolutely fantastic. Give us an opportunity to get in on this bullish uptrend. Now, as far as what we have going right here, weekly chart, not much, broke beneath that moving average. We have a shot here. We've got a weekly Bollinger midpoint down there, right around 105.9. I think that, man, a potential bullish entry right around maybe 107, somewhere right in here, 107.5. That's pretty good stuff. If we get a chance to join the prevailing bullish trend in Bitcoin, I'm all for it. And stories like this, I mean, realistically, using the blockchain to report government data and information, decentralized data reporting, that's huge. That could be really the next leg up for things like Bitcoin, things like Ethereum, things like Dogecoin. It's crazy. It's really crazy. And the mainstream and governmental adoption of cryptocurrencies will take this asset class to the next level. Now, where it goes from the next level, I don't know, but I don't think we're done going up. We're not done going up. All right, everybody. I think that's a wrap for today. Blue Mango, absolutely, you're welcome. The big thing for tomorrow is going to be the PCE price index. I'll have that recapped. We're going to talk a little bit about trading moving averages. But as far as just real quick look at our PCE expectations, let me pull them up real quick for you, and then we'll go ahead and sign off because it is important to be aware of PCE. Core PCE and PCE are the Fed's go-to inflationary metrics. And what that means is it means if it comes in hot, there's going to be a lot of problems with trying to cut interest rates. So let's go ahead and get right out to it. This is for tomorrow, and it's going to be about 8:30 a.m. Eastern time, 6:30 a.m. my time. And right here you go. So you've got core PC prices. We're expecting them to tick modestly higher, 2.9% on a year-over-year basis, 0.3%. We're expecting them to come in line with expectations or in line with the previous release for July. I don't know. I really don't know. This has a potential to come in hot. And then the PCE prices, you're going to be right there at 0.2%. We're expecting the PCE number to come down, core to tick higher. Why? Fuel costs sort of came down just a little bit here. Gasoline, they refined a lot of gasoline, so those prices were down a bit compared to where they were maybe last year at this time. But this is interesting stuff. We're expecting PCE to come down and core PCE to tick higher. The core probably will tick higher on a yearly basis because of the tariffs. And remember those PPI numbers, prices to wholesalers were just a little bit higher. So we got to watch that as well. But all in all, it's a pretty good day to talk a little psychology. I'll recap the core PC stuff for you. We'll find the big mover and the shaker of the day. We're watching metals closely, but we'll definitely be doing that. As far as the rest of it, we're going to talk moving averages. I'm going to pick out a few. I'm going to show you some of my secret sauce on my moving average, and then we're going to go ahead and pick a few of the most popular. I'll show you the difference between a simple and an exponential, and maybe we'll look at a few of the most popular patterns like a death cross and a golden cross to go ahead and send you into the weekend. We'll also get you prepped and ready for Monday Labor Day trade. Remember, markets will be closed, and we'll go over all that tomorrow before you head into the weekend. All right, everybody, I'm going to go ahead and sign off here for a few hours. Be sure to leave your questions. Any questions that you want, bring them tomorrow. Great psychology session. I'm more than happy to stay as long as it takes to answer everybody's questions. As far as what we can expect in the coming 24, I don't think much, but as soon as I don't think much, Trump will say something or the government will do something. The markets will just absolutely explode. So we're going to have an interesting end of the trading week. I think it's going to be a pretty good one. Where we're at next week at this time, it's anybody's guess. But Monday's Labor Day, things are going to change big. Things are going to change big starting Tuesday. You're going to see more participation. All right, everybody, I'm going to go ahead and sign off for right this minute. If you have any questions at all, head on over to howtotrade.com. Send me a private message inside the trading room. I'll be sure to get back to you. As far as where we're at, though, we're in interesting times. This has the feel of the calm before the storm. We're going to see what happens. All right, everybody, have a fantastic trading day. Trade the action well, and we'll talk soon. See you.